Ever wondered how fintech companies have become a driving force in our economy? Let's dive right into it. Born from the marriage of finance and technology, fintech companies have been steadily gaining momentum over the past decade. They have disrupted traditional financial systems, bringing about a paradigm shift in the way we manage and interact with money. Fintech firms offer a broad spectrum of services, from mobile payments and peer-to-peer lending to insurance and investment management. They leverage cutting-edge technology to provide seamless, efficient, and often cheaper alternatives to traditional banking services. Picture this: being able to transfer money to your friend halfway across the globe in a matter of seconds, right from your mobile phone. That's the power of fintech. These companies are not just making our lives easier, but they're also playing a significant role in driving economic growth. By providing easy access to financial services, especially for the unbanked or underbanked populations, fintech companies are fostering financial inclusion and empowering entrepreneurs. A small business owner in a remote village can now secure a loan with just a few clicks thanks to fintech. But it's not just about accessibility. Fintech companies are also all about innovation. They're constantly pushing the boundaries, experimenting with new business models, and challenging the status quo of the financial industry. And it's not going unnoticed. Governments, regulators, and even traditional banks are waking up to the potential of fintech. They are embracing the change, collaborating with fintech firms, and even investing in them. This is not just a trend, it's a revolution. But remember, with great power comes great responsibility. As fintech companies continue to grow, they also face challenges. Regulatory hurdles, cybersecurity threats, and the need for consumer trust are just a few of the issues they must navigate. So, fintech companies have indeed revolutionized the way we deal with money. Stay tuned as we delve deeper into this exciting world in the following scenes. Thank you for being such a wonderful audience and tuning into our channel for detailed information. If you haven't already, please subscribe to our channel, My Project Paper, for more insightful content. Now let's take the case of Stripe, a fintech giant. This is a company that has taken the financial tech world by storm. Born from the innovative minds of Irish brothers Patrick and John Collison, Stripe is a testament to what can be achieved when technology and finance are seamlessly married. Stripe's success story is truly inspiring. It all began in 2010 when the brothers identified a gap in the market: a simple, easy-to-use platform for online payments. They saw a world where businesses, especially small enterprises and budding entrepreneurs, were struggling with the complex, often daunting task of setting up online payments. So they set out to simplify the process, and Stripe was born. The core of Stripe's appeal lies in its user-friendly interface. It's designed in a way that even someone with minimal tech knowledge can navigate and operate it with ease. It's all about making online payments as simple and straightforward as possible. But Stripe didn't stop there. It's not just about accepting payments. It's about creating a whole ecosystem that supports businesses in their growth journey. From handling billions of dollars in transactions to providing tools for fraud prevention and financial reporting, Stripe proves itself to be a one-stop shop for businesses' financial needs. And what does this mean for entrepreneurs and small businesses? It means they can focus on what they do best: innovating, creating, and expanding their business, without worrying about the financial infrastructure. Stripe takes care of that. Moreover, Stripe's impact extends beyond just being a payment processor. It has democratized e-commerce, allowing even the smallest of businesses to compete on a global scale. This has been a game changer for many entrepreneurs, giving them the chance to reach customers they never could have before. In a nutshell, Stripe has not only made online payments easier, but also contributed to the growth and success of countless businesses. It has revolutionized the way businesses operate online, making financial processes more accessible, efficient, and secure. This is how Stripe has made a significant contribution to the fintech industry. It's not just about creating a product, it's about creating opportunities and fostering growth. And that, ladies and gentlemen, is the power of fintech. Another great example is Square, a company that has democratized payment processing. Imagine being a small business owner or an individual seller struggling to make ends meet. You're offering a great product or service, but you're limited by your ability to accept payments. The high costs and technical complexities of traditional payment processing systems can be a significant barrier. This is where Square has made a world of difference. Square is a shining beacon in the landscape of fintech companies, a true success story. Founded back in 2009 by Twitter co-founder Jack Dorsey, Square started with a simple yet revolutionary idea: to make payment processing accessible to everyone. And they certainly delivered on that promise. Square introduced a small, square-shaped card reader that could be plugged into a smartphone or tablet, turning these devices into mobile point-of-sale systems. Suddenly, anyone could accept credit card payments anywhere, anytime, but that was just the beginning. Square has since expanded its offerings to include a full suite of business management tools. From digital receipts and inventory management to sales analytics and customer loyalty programs, Square has transformed from a payment processor into a comprehensive business solution. The success of Square is a testament to its innovative approach and customer-centric philosophy. By identifying a gap in the market and filling it effectively, Square has empowered countless small businesses and individual sellers, enabling them to compete on a level playing field with larger competitors. But Square's success doesn't stop there. The company has also ventured into the world of peer-to-peer payments with Square Cash, now known as Cash App. This easy-to-use app allows users to send and receive money instantly, further exemplifying Square's commitment to simplifying financial transactions. One cannot discuss the success of fintech companies without mentioning Square. It's a company that has truly democratized payment processing, making it accessible and affordable for all. And in doing so, Square has not only changed the game for small businesses, but also reshaped the entire landscape of the financial industry. Square has indeed changed the game for small businesses. Scene script. However, like any industry, fintech is not without its limitations and regulations. Despite the many advantages that fintech companies bring to the table, they also come with their own set of challenges. One of the most prominent issues these companies face is security. As they deal with highly sensitive financial data, they become prime targets for cyber criminals. Data breaches can have severe consequences, not just for the fintech companies, but also for their users, who could potentially lose their hard-earned money or have their personal information exposed. Moreover, the very nature of these companies, innovative and disruptive, often means they operate in a gray area of the law. Their services may not fit neatly into existing regulatory frameworks. This can lead to difficulties in compliance and potential legal risks. It's like trying to fit a square peg into a round hole. Sometimes the law just hasn't caught up with the technology. Regulatory challenges aren't just about compliance, though. They're also about fairness. Traditional financial institutions often argue that fintech companies have an unfair advantage because they're not subject to the same stringent regulations. This has led to calls for a level playing field, where fintech companies are regulated in the same way as traditional banks. So, how are these companies regulated to protect consumers? Well, it varies from country to country. In the United States, for instance, fintech companies can be regulated by multiple agencies, including the Consumer Financial Protection Bureau, the Federal Trade Commission, and the Securities and Exchange Commission. These agencies monitor fintech companies to ensure they're treating consumers fairly and protecting their data. In the European Union, fintech companies must comply with the General Data Protection Regulation, which sets strict standards for data privacy. They're also subject to the Second Payment Services Directive, which aims to make payments safer and more secure. Regulations not only protect consumers, but also promote competition and innovation. They provide clear guidelines for fintech companies to operate within, preventing monopolies and encouraging a diverse range of services. However, regulation is a double-edged sword. While it can protect consumers and promote competition, too much regulation can stifle innovation. It's a delicate balance that regulators must strike. They need to ensure that fintech companies can continue to innovate and disrupt, while also protecting consumers and maintaining the integrity of the financial system. In the end, fintech companies, like any other businesses, have to navigate a complex web of regulations and limitations. They must ensure the security of their platforms, comply with various regulatory bodies, and compete fairly in the market. These limitations and regulations are crucial to ensure a safe and fair fintech environment. But remember, they are also what keeps the fintech industry innovative, competitive, and consumer-centric. What about cryptocurrencies? Do fintech companies support them? This is a question on the minds of many as we navigate the dynamic landscape of the financial industry. The answer isn't a simple yes or no, but rather a nuanced It depends. The world of fintech is as diverse as the cryptocurrencies it grapples with. Some fintech companies have wholeheartedly embraced cryptocurrencies, seeing them as the next frontier in financial innovation. They've integrated crypto into their platforms, allowing users to trade, invest, and transact in various digital currencies. Think of companies like Coinbase, a fintech giant that has built its entire business model around cryptocurrencies. Yet, on the other end of the spectrum, we find fintech firms that tread the crypto waters with caution. Regulatory uncertainties are the primary concern here. The regulatory landscape for cryptocurrencies is at best a patchwork quilt of disparate guidelines and at worst, a murky, uncharted territory. Cryptocurrencies, with their decentralized nature, pose a unique challenge to traditional financial regulations. They exist outside the realm of central banks, and their anonymity can potentially be exploited for illicit activities. As such, regulatory bodies around the world are grappling with how best to manage and oversee these digital assets. Fintech companies, particularly those with a more conservative approach, are understandably wary of stepping into this regulatory gray area. They choose to focus on more established financial services, waiting for the dust to settle and for clearer rules to emerge. It's also worth noting that the volatile nature of cryptocurrencies can be a deterrent for some fintech firms. The high-risk, high-reward environment may not align with the risk profile of all companies or their customers. In conclusion, while cryptocurrencies present an exciting opportunity for innovation and growth, they also bring with them a host of challenges and uncertainties. Fintech companies find themselves at the crossroads, balancing the potential rewards against the inherent risks. So the relationship between fintech and cryptocurrency is complex and evolving. So, what does the future hold for fintech? As we stand at the precipice of tomorrow, we can't help but wonder what the future of fintech might look like. The landscape of financial technology is ever evolving, and the future promises to be nothing short of revolutionary. One of the potential developments we foresee is increased automation. Automation has already begun to streamline processes, reduce manual errors, and boost efficiency in the financial sector. But we are only scratching the surface. As technology advances, we can expect to see even more tasks being automated, from risk assessment to customer service. With the help of sophisticated algorithms, the financial world will become faster and more efficient than ever before. Besides automation, artificial intelligence is another game changer on the horizon. AI has the potential to revolutionize fintech by providing personalized financial advice, predicting market trends, and detecting fraudulent activities. Imagine a world where AI-driven systems monitor your spending habits, offer tailored financial advice, and even predict your future financial needs. This isn't a far-off dream, but a reality that's just around the corner. And then there's the elephant in the room: cryptocurrencies. While some fintech companies have already embraced digital currencies, others are still on the fence. However, as cryptocurrencies continue to gain popularity and acceptance, it's likely that more fintech companies will jump on the bandwagon. This could lead to a future where digital currencies are as commonplace as credit cards, changing the way we think about money forever. But with these advancements come challenges. Security, regulation, and public trust will be vital issues to address as fintech continues to evolve. The companies that can navigate these hurdles while pushing the boundaries of innovation will be the ones to shape the future of this industry. No matter what, the future of fintech seems bright and full of possibilities. So whether you're an entrepreneur looking to disrupt the financial world or a consumer eager for more control over your finances, there's a lot to look forward to. To conclude, let's summarize what we've learned today. We started by examining the rise of fintech companies, a revolution driven by technology and innovation. These companies have emerged as a significant force in the financial sector, leveraging cutting-edge technology to offer efficient, cost-effective services. They're transforming how we conduct financial transactions and changing the landscape of the banking and financial industry. We then delved into case studies of two successful fintech companies, Stripe and Square. Stripe, founded in 2010, has made it simpler for businesses to accept payments online, while Square, founded in 2009, has revolutionized point-of-sale transactions with its small, portable card reader. Both companies exemplify how fintech can disrupt traditional financial systems and have set the stage for many more innovations to come. Next, we discussed the limitations and regulations of fintech companies. We noted that while these companies offer many benefits, they also face challenges such as regulatory scrutiny and security concerns. Fintech companies operate in a heavily regulated environment and must navigate complex laws and regulations. At the same time, they must ensure the security of their customers' data, a task that is becoming increasingly difficult in today's digital age. We also explored the relationship between fintech and cryptocurrency. We learned that many fintech companies are embracing cryptocurrencies and blockchain technology, viewing them as opportunities to further disrupt traditional financial systems and offer even more innovative services. Finally, we looked to the future of fintech. We concluded that while the fintech revolution is already well underway, it's far from over. New technologies, new ideas, and new companies will continue to emerge, further transforming the financial sector. Remember, fintech is here to stay, and it's changing the way we handle money. The future is bright, and we can't wait to see what's next.